Okay, is that now better? Sorry guys, so you've only got the music. Okay, so hopefully that should be better. There is some setting when we're running these broadcasts. For whatever reason, it changes the setting for the microphone. So I do apologize. I should have checked it before going live, but I haven't needed to do that over the last number of weeks, and apologies for that. So we are back. So of course you probably missed the brief introduction, but welcome to join us. Please see our risk warning currently up on the screen, and let's start as we always do. We'll put our trade plan up from last night's webinar up very shortly, so you can see the markets. So every evening at 9 o'clock for about 30 minutes UK time, we do go through these opportunities, and we plan well in advance of the moves occurring, so you can see which markets we're focusing on, what direction we're looking to trade them, and what levels we're looking to get into those trades. So it is kind of a comprehensive approach that we've put together. Now, before we obviously get into trades, we want to make sure that there's no major news events that are likely to kind of blow us out of the water. One of those news events could be the OPEC meetings that we have today. So they were scheduled for tomorrow. They've been brought forward by one day. You do occasionally get some of this erratic scheduling from OPEC, and it's not unknown, but it is very, I suppose, there's a bit of a concern there for these financial markets. So we had been planning to get into oil if we had a good opportunity prior to OPEC meeting, but obviously that's been brought forward. So now we need to trade this market with a little bit more caution than perhaps we would have liked to have done today. So we'll have a look at the oil markets in more detail very shortly. The only real scheduled news event for the trading day, the fundamentals, is a consumer confidence figure coming out of the US at 3 p.m. UK time. So we're looking really at a figure which has been on the increase, and of course we've had Biden's stimulus package, where every American got a check for $1,400. So that is likely to improve confidence, of course, you would assume. So, and that's what the forecast is actually telling us. And this type of degree of confidence is pretty much built into price. So again, with like a lot of these events, you're looking for the deviation in that number. So if the market has got it wrong for whatever reason, and then you might see some volatility around that event. So if the confidence is greater than expected, that's obviously a good news story. We can expect probably the dollar to strengthen slightly. And the opposite is also true. If the confidence figures, bearing in mind the stimulus package and the check in everyone's back pocket, and the stimulus, the monetary policy stimulus, and the fiscal measures that are all in place are all designed to try to create a bit more confidence. And if that confidence is not quite what the market perceives, then that could be actually quite a significant problem for these markets. So it will be interesting to see the US consumer, see how confident they are about the current state of affairs. And last but not least is the 10-year note. So just looking at what's been happening with the US bond market. So what we're seeing is, I suppose, a little bit of a flattening out. So we were up at these highs, up at 175 over the last, over the last month, 3 weeks. And we've had a steady decline, as you can see, over the last 2.5 weeks. And we've just sort of plateaued out, a slight uptick really from yesterday's conditions. Yeah, sorry about that sound issue, guys. Apologies for that. It was just a technical issue on that one. So we're getting a slight uptick. When these bond yields are kind of in this little state of calm, we're not getting too much erratic price action. It does lend itself to good market fundamentals, and is actually likely to be quite positive for the US indices markets. So let's get up our trading charts then. So this is our trade plan from last night. So we were primarily focusing on, and we were able to benefit from that move yesterday. We had a nice move to the downside in our dollar CAD trade. So there's our entry level, there's our stop loss. We got into it, a little bit later than anticipated. We would have liked to have been in this market below the 124.48 level. Okay, I think we're back. Sorry about that. I don't know what's going on today. So what we have now at the dollar CAD is this little sort of range that we've accelerated to the downside, and then we've just drifted sideways. So really, we're looking for the next breakout to the downside in these markets if we can get it. The New Zealand and the Aussie dollar are very much in the same position. So we've got levels of resistance just above these current highs, or at these current highs. And yesterday we saw some quite bullish price action for the New Zealand and the Aussie. And now today we've got marginally negative, although not that convincing to any great extent, as you can see. So we can probably just get rid of a few of these just to make it a bit clearer. So we really don't need all of these lines. These are intraday levels. So these are levels that we look at from day to day. So that's why obviously they can change just a little bit. But there's no doubt about it. A break above that 77.61 yesterday was a decent opportunity to the upside, which has now just kind of rolled back over. However, prices have bounced off that 77.61. So we'll go into this detail in just a moment, just to see where we are with these trades and if an opportunity still exists. But it would mean we'd need to see the reversals of price action pushing back towards the upside. So at the moment, they're just a little bit on the weaker side. Crude oil is an interesting one. I'll bring it up on a big chart so you can see it. So again, we don't necessarily need. We did have this little high just sitting in here at 62.37, and we do like prices above that level. So we've had this little range really over the last 5-6 days, and it's been quite a volatile little journey. So with today's OPEC, we just got to be careful with this market, because we can easily get that little rollover trade. The demand scenario for OPEC and JMC has remained unchanged, so they're not anticipating any further increases in demand or any significant issues on the supply side. So really, we've just got a stable oil market at the moment, and that's what we're looking to trade. But let's see what comes out at the end of the meeting. We might still get some significant volatility between now and the end of the play today. So we'll come back to the oil market and see where the opportunity lies. And a market that's always worth keeping a bit of an eye on are your equity markets, because we've technically made a new all-time high again today, actually at the 4,200 level. So just a very significant number. 4,200 is a nice round number. But what we can see, and if I just get up my pen, just to share the price action over the last 3 weeks, let's say. If I just draw a little bit of a box around
Italy's lower house,
this price action from,
plan.
Let me turn this off just for a second. So we're talking about from the 12th of April through to the 27th of April. So, 2.5 week sideways moving pattern really in this market. So we spend an awful lot of time going through traders and making sure that they understand the market conditions in which they're trading. So if you're buying or selling the S&P, just note that you are buying and selling within consolidation, and that just means the likelihood is that you're going to be relatively range bound, which means, you know, from an expectation perspective, if you were looking to buy, or let's just say you were looking to sell off this little high here at the 41.59, and you can see that the lows are the 41.13, you know, you're talking about a 50 point potential profit margin, you know. So to look for an 80, 100 point, 150 point move is probably unlikely, just as a result of this range bound market condition. So that's the thing to be careful of. And you can see we're really struggling to kind of close or break above that 4200 level. So yeah, so one market that we do quite like the look of is the this euro yen. So this is our trade plan. We're going to look to see how we can possibly look to get into these trades in just a moment. So what this market is doing is just creating a series of floors and ceilings, and then we just get the breakout level, and then we drift into another bit of sideways moving price action. And that's pretty much what we're seeing since probably late last night. We're seeing this market just bounce back to these levels. You can see this is why we really like support and resistance. We don't have to work too hard to be able to identify, you know, clearly defined support and resistance, as you can see. So we are drifting in the sideways, but we do have a really strong bias to the upside, actually above this level, and it's a market to just keep an eye out for. You know, we had BOJ overnight, so growth. They're seeing brighter days ahead in Japan. Their monetary policy has largely remained unchanged. We just got this high, just this last little hurdle in this market. But yesterday we just pulled back just below this level, so it's we're actually in this on a daily time frame as well, so more of a kind of a longer term view to the upside in this market. Looking at the weekly, you know, is there more upside from here? You'd have to expect the answer to be probably yes. We're probably likely to see further upside. Just looking at the monthly. So this is the big picture view. We're currently, as you can see, we're kind of in the middle of the monthly high range and the monthly low range. So plenty more upside. And we are now breaking last month's monthly high as well. So we can expect this market to continue further to the upside. So further continuation expected in the euro yen. And what we're seeing is kind of a high up here at about 170, a low at the, say, the 100 level. So we've got this little sort of narrowing of price action. So we can take these little highs and take these little lows, and these are the levels where there's a very, very significant psychological game changer in these markets. So what we can do is expect further upside, but if we run into resistance somewhere in this type of zone, you know, it'd be in keeping with our analysis, so you wouldn't be that surprised. But at some point, this market will end up breaking above, if I just put these levels in. So if we break between the 137.70 and the 114.48 to the downside, then that will truly give you the longer term direction for these markets. But right now, we're pushing higher. We can expect further upside. That's just a little kind of overview, really, of these markets as things currently stand. If you guys are trading anything, let us know. Pop it into the chat box and we can certainly have a look at it if you would like us to. So the euro yen, we do have this level of resistance up here at the 130.91 level, so we're only 12-13 pips away from breaking out of this quite reasonable midterm little range that we've been in. Okay, so we'll just go through these one at a time. We've got plenty of time now before the US Open, so we'll see. Our bias is still to the downside for this market. You can see these prices continuing to roll over. We spoke a little bit yesterday about the importance of being able to see price action and understand what's going on. So we've got a few lines on here, but by no means do they get in the way of us being able to see what's happening. So if you do have a very cluttered chart, do consider perhaps decluttering it. We've seen some crazy charts in the past, and what's important for us is understanding price and momentum. So who's in charge of these markets and what direction are they pushing these markets, and you can clearly see that the overriding momentum is to the downside, so we're looking to continue that move, and there's no reason to suggest a market won't continue that move unless we have reason to support that turnaround. So we're talking about technical structural failures and things like that. On the daily time frame, you can see the bias is very much to the downside, so we do have that wind behind us, and we've kind of pulled back on the daily time frame, and now we're just ticking over to the downside. So a break below that low would constitute a pretty decent opportunity to the downside. We can actually record the price at which this market really fails to close below that level. So if we do close below the 123.90, that's kind of the first tick to be the first criteria to be met, and then it's the breakout below the 23.82. So only sort of 8 pips lower, we'll be looking to pull that trigger. So we can keep a close eye out. So now we can just amend this slightly. So now we're looking for a high probability sell trade in the dollar CAD, except this time it's below the 123.82, 123.82 level. So that's our potential sell trade. So we'll keep a close eye on that one. So looking at the commodity currencies again with the Aussie dollar. Right, so we've already closed above this level, so that's the first thing to note. Now, any turnaround signals to the upside, with the equity markets threatening certainly to be pushing higher, although there's very little volatility in these markets. But we can certainly plan for further dollar weakness. So this one might be a straightforward look at a structural failure trade. So at the moment we're very much pointing to the downside. So there's your structural failure trade to the downside, and we're still in that little zone. We've pulled back to this level in here, and what you want to see is an attempt to make a new low, and you want to see that fail. So like to the upside, that's the going from higher highs to then beginning to see this little price just begin to roll and start seeing lower highs. So that all formulates a shift in the psychology in this market, and then you want to see lower lows as the market is moving. So you're going from higher highs and higher lows to that little beginning phase, which we refer to as a structural failure to the downside this time, and we're still in that phase. So now we want to see what we're looking to see now at this stage, just to kind of talk you through it, is an attempt for this market to continue to the downside. And again, you want to see that failure begin to kick in. You can identify these levels. So when that market turns around, there's your high probability buy trade, and you'll be looking for prices to be pushing back up to these levels up here. So that's kind of, we look at these structural failure trades to the downside and to potentially to the upside, and then we want this market to conform to that sort of idea. And if it does, we'll trade it without too much sort of psychological scarring. We can trade it with a bit of clarity. And that's really what you want to be trying to do. Start to trade with a bit of clarity about what you're doing. But you do need markets, of course, to perform as per your expectation. And sometimes, especially last week, you know, they failed to perform as per our expectations. So, you know, that's why we talk about patience quite a lot, because you can trade sort of incoherent market conditions. We just don't recommend you to do it because they're incoherent and you don't really know where you're at with them, and there's no clear defined path, and you're not seeing the correlations, and there's a lack of fundamental drivers. You know, these are all reasons to just be patient, I guess. Yeah, so yeah, Finbar, the euro pound. So you're looking at that as a sell trade. Okay, we'll absolutely have a look at that as well. Yeah, and copper long. Yeah, copper has seen a massive move to the upside, so we can take a look at those. So what I'm going to do is just finish the just getting ready for the open, and then we'll have a bit of time and we'll absolutely look at those. So previously we've been looking for a high probability pullback buy trade around 77, 79. So we're at that kind of level as things currently stand. But now we want a structural failure. So now we're looking for a high probability structural failure buy trade. Yeah, it's not far off that. It's 77. $77.85. So we'll just put that level in there. So this has the potential to be a little bit easier perhaps than the Aussie dollar. No, it's not. It's just a direct pullback off the lows. So so we've had a bit of a structural failure trade to the downside at the 72.05, and we're pulling back off that lows. So on a 4 hour, we're just literally pulling back, and now we're just moving to the upside. So it would be okay for us to actually look for a structural failure to the upside. We take note of this high as well. So it's the same type of analysis as the Aussie dollar. So we're looking for a high probability structural failure buy trade. And we use the word around because we can't be too pinpoint with that potential level. It's just roughly around the 72.27. 72.27. So we're kind of looking for those structural failure trades. So this one's worth looking at on the smaller time frames. So where do we position ourselves in this one? Well, when we draw this line in here, you can see that, and this can help you sort of keep on the straight and narrows, that you get a close above the important level. So you get, the first thing you get is the close above. The second thing is the follow through. So you take the high and you want to see this market actually break through with some purpose. You get the run up, so you get the level bouncing off the support, you get the run up to the upside, and then you get the break, and then you think, right, great, well now I want all those sellers to start liquidating their positions and start turning to buy orders, and prices are going to really nicely push to the upside. So that's what you would expect, and then you don't get that. So you get actually almost a false breakout trade, and then you struggled over the course of the next hour to actually push higher. So that, from a technical perspective, is not great trading conditions. It's not really what you'd want to see. So so we'd be looking for structural failure trades to the upside with this one as well. So around so it's around the 130, around 130.80. I just want you to just see that as best as possible, but it does make it a smaller. So it's that 130.80 level. So we want prices to actually roll over a little bit more, and then we want to see, the next attack to the upside. So the Dow Jones, we'd just expect further higher. Okay, and it was sorry, I think we just had the S&P in here, didn't we? Just to keep an eye on it. So lack of volatility again in today's trading. The same thing yesterday across the US indices markets. Nothing during the European and UK Open. Nothing at all through the US Open. And then as the European markets and the pound markets, UK markets started to close, then we saw a little bit more of an uptick, or at very minimum, some positive price action in the S&P 500. I think that 130.80 level is a daily high as well, unless I'm mistaken. Oh no, it's not. The daily high is a little bit lower. So it's just one to monitor. There very well may be a decent trade. How much volume in these markets is there? It's a tough one. Okay, so let's have a look at the euro pound. First of all, see how they've been performing against the euro. So the euro has been mildly stronger against the dollar, and the pound has been actually a lot more stronger than the euro. So straight away we would be looking at the euro pound. You're quite right, for a sell trade. So so at what point and price would we like to get into this sell trade? There's your daily low. There's your high probability continuation trade. As we can probably regard this as a, as a kind of a double top, a bit of price action. Technically a triple top, really, isn't it? But so we can expect probably markets to perform in the kind of an M shape. So, and there is a little bit of pound strength, more so than euro strength against the dollar. So you're quite right, it's an opportunity, but it's like a few of the other trades that we're in where the opportunity exists, but the volume is quite poor. So we're just moving sideways for quite a while, and if you track these lows, as you can see, what we get on the 15-minute time frame is a close below, which is fantastic. That's exactly what you want. And then the next one, we push low initially, but then it kind of reverses back to the upside. So again, that's not as per expectations. So this is a tricky one, because you could easily get sort of sucked into this one below that level. And but what you can see is we're not really getting the follow through just yet that you would expect from this type of price action. So, and there's the overall volatility in today's market. It's negligible, and we're seeing that across so many markets. The market is probably giving us marginally the better opportunity is potentially the euro yen. But now, can we close above the 130.80? And then if so, we've got a decision to make. Okay, and I think you said the other one was, yeah, the the copper market. Right, I don't actually have the copper market on this platform. Let me me see if I have it on this platform instead. Sorry, bear with me 1 second. Yeah, I've got the high grade copper market. Oh. Let's have a little look at that one. Yeah, we've had a really sort of significant move to the upside. Last September we were down at 2.9, and now we're up at nearly 4.5. So we've probably seen a 50% uptick in copper prices in the last 8 months, let's say. So these markets are showing no signs of. I'm sorry, I can't slide this chart over to our screen. Unfortunately, it's they're on different systems. But I mean, we can have a look. We just got a few minutes left, so I'll. See if I can get a chart up here for you. So so this is over the last month, so a very significant uptick. We'll have a look at the last sort of 6 months. So a year ago, this time last year, we were very much down at 2.3. Now we've nearly doubled in price. $4.3 as of now. So you know, that's the reality of these commodity prices, and we're seeing the dollar sell off. So it increases demand for commodities, plus the scarcity of the supply chain on a global basis. You know, we had situations like the Suez Canal blockage and things like that. All of that has a very significant impact on supply chains and the movement of natural resources around the world. And all of these are playing out in real time in some of these markets. Yeah, so the natural gas market. Yeah, so I've definitely got the natural gas. I just can't find the natural gas. Okay, sorry, yeah, natural gas. Okay, this is a little bit more interesting, perhaps. So we'll do a little bit of analysis first. So you want to sort of have a look at the levels at which these markets respect more often. And so zooming in a little bit more, you can see we had this little W formation. We had prices break above it, drift sideways for a while, and then continue to the upside. So I suppose it could be argued really that the opportunity was above the 2.778 level, and we've seen some continuation today to the upside. So it's a decent buying opportunity there in that one. So where are we at up at these highs? So we've had a very significant gap to the upside overnight. So straight away you'd be concerned about kind of potentially filling that gap. So plenty more upside. It's just a case of technically, you know, where do you place your stop loss? If you get in at these highs here, do you place your stop loss at this low, or is that going to be too tight? And then will this market look to close, you know, that gap? I mean, these markets aren't, you know, they're prone to gapping, so you need to build that into your, I suppose, your risk profile, which is one of the reasons why we don't trade it, because especially for you guys and those that are kind of starting out on their trading careers, like you can imagine if we trade a market that's very prone to gapping, and we look to sell a particular market and it gaps to the upside, then that could be a large portion of someone's capital. And it's not that there's no opportunities, and some of them are fantastic opportunities. It's just that it's a bit, it's not fair for us to actually, you know, focus on trading markets that gap, you know, markets that we can do absolutely nothing about when they gap either to the upside or to the downside. So although there's really good, strong, viable opportunities in these markets, they're challenging environments, and we choose not really to focus on a lot of the fundamental developments behind markets like natural gas and copper. Now we do regarding crude oil, Brent oil, and gold. So we're familiar with market movements with those markets, but and that's the other thing. Just know a little bit about the markets in which you're trading. We've got lots of traders that like all sorts of unique and different markets, and they're quite knowledgeable about those markets, and that's exactly what's required. Okay, so now we are at the top of the hour, so let's just see. Let's see the state of play, shall we? So we're still range bound in the dollar CAD. We don't really have a corrective phase just yet for the New Zealand dollar and the Aussie dollar. If this market just sells off, if both of these markets just sell off a little bit, and then accelerate through to the upside, then they can be viable buying opportunities. Euro yen is not really doing an awful lot either. Crude oil is really struggling to kind of push to the upside, and the S&P 500, just a lack of volatility really, isn't there? These markets have been a bit annoying in the last week or so. Sometimes you do need to be very patient with these markets, because I suppose otherwise you're just guessing on the outcome. We want to try and stack the odds in our favor when we trade, and not be frivolous with our capital. Because these current levels that we're seeing in the New Zealand dollar and the Aussie dollar are the levels at which we'd look to get in to the upside. We just would prefer to see just a bit of a corrective move in each before you get that move that we're looking for around this kind of level. So, well, and what that does is that allows you to use these levels of potential support and resistance for stop loss placement. So you know, creating structures in markets is always quite useful, because this is the technical information that we need to get in. So we're creating higher highs and higher lows with buy trades, and we're looking for lower highs and lower lows for sell trades. And sometimes you can keep trading as simple as that, you know, and build in a little bit more, I suppose, infrastructure behind that. But you know, it can be as simple as that, and then at least you're looking to go with the trend. And if you catch one of those sort of structural failure trades, or the trades that you're breaking out after long periods of consolidation, you know, and you can stay in those trades, and you don't need many a year, you know, 3 or 4 maybe, you know, you can really see some very, very significant returns in a relatively short period of time. So they're worth looking out for and trying to trade. So the dollar CAD is just kind of a straightforward, you know, breakout trade to the downside. So the longer we drift sideways, the more we're creating a floor and a ceiling. So there might be further upside moves in the euro yen pretty soon. But crude oil, not really doing much yet. Nothing really going on in the S&P. Nothing going on in the dollar CAD. We need to be patient really with the Aussie and the New Zealand dollar. So really the market that's marginally in a better position across the board is the Euro Yen. We are working quite hard to kind of pick these opportunities. They're not jumping out of the charts at us just yet. Excuse me. Yeah, when starting out, is it best to have a very small profile like 6 and then trade them? The answer's probably yes. It's certainly better to have, because you don't want to be too distracted with too many different markets. But I suppose one of the things that we bring to the table is that we are mindful of multi-asset class, and we're very interested in the correlations of markets. So if we buy the euro dollar, we would like to see the equity markets push higher, oil probably push higher, gold potentially finding a bit of a bid. And you want to see, I suppose, the dollar weaken across the other majors. Those are the conditions in which we really like perhaps buying the euro dollar. And the problem is, if you're working with 4 or 5 or 6 different markets, is that you're not necessarily privy to what's going on elsewhere. So, I mean, as you know very well, we focus on, I think, 16 markets in total, and yes, quite a lot in number. But what that gives us is, like last night's trade plan session, we had 5 high probability trades. So what we end up doing is we end up choosing 3, 4, 5, 6 trades out of 16 every day. So we're not really concerned too much with, let's say we identify 6 trades. We're not too concerned about the other 10 markets, in today's trading. We're only concerned in the 5 or 6 that we've identified last night. So that's a way of broadly having a way which you can narrow down your trade selection opportunities. You can plan for the trades, and then look to pull the trigger in those markets that at least you've done your planning, you understand, you're aware of some of the news events around those particular markets, and you have the correlations on your side. So I suppose it's about the whole the holistic approach to trading markets, which is, it's not just strategy, how do I get in, how do I get out? It's actually looking across and taking a bit of a step back from markets, looking at bigger time frames, multi-time frame analysis, multi-asset class analysis, looking at the correlations and identifying the correlations, looking at the fundamentals. This is what all of your institutional traders are doing every day, day in, day out. They're putting all this information together, and they're making educated trading decisions, and they're creating trading ideas, and they're looking to explore them, and effectively pull the trigger when the time's right. And that's what trading is for us. That's what we look to do, and almost exclude a lot of the nonsense that you will probably hear an awful lot of online. Some of it is really strange stuff, but trading does require a little bit of work. It's there's a perception that it's very easy and anyone can do it no matter what, and in our experience that's definitely not the case. only certain people have the, I suppose, the temperament. Firstly, so you need a certain type of temperament. You need to have a certain degree of discipline in kind of what you're doing. You need to access the right education from the right people. One major development in my trading career, sort of 3 years in, after struggling for the first 2 years, quite significantly. Just looking at the euro yen now, it's just beginning to make its move. So let's go in and just have a look at this on just perhaps a 5-minute chart. See if we get a better handle on things. So it now looks like we're getting that move. So we're above that 130.80 level. So we'd need to look at probably the 130.57. Okay, so let's just give it a few seconds just to see how this market closes, and then we'll look to pull the trigger if the opportunity is right for us. So the yen is weakening across the board, so it does stack up on that front as well. So we're just a few seconds away from the close, and then we'll look to get into this trade. So right, here we go. So So we're just holding up at these levels, just ready to pull the trigger. So yeah, I guess Finbar, just regarding your question, it's the short answer is yes. If you can get to study 6 markets and you can understand them and you can try get a good feel for how they ebb and flow, then that is definitely better than being distracted by too many markets too early, and then integrate perhaps 1 or 2 at a time. The more experienced you get. So right, let's get into this trade. Let me see. Okay. Okay, I've got a little line in here, which, oh, there we go. Okay, so this is our entry level. Just trying to get that line away from it, but we'll have a look at it in this level here. Okay, we're getting quite a strong pullback now on that trade. Okay, so that's on the minute time frame, by the way. So what we do is we're looking to get in, and you can see the sort of the grinding nature of this market, which is making marginal highs, but you know we're seeing strong pullbacks, so we can expect that to continue like in this fashion, like we're just commenting on this type of price action. So what we don't want to do mentally is we don't want to start freaking out about pullbacks, and this is why certainly more recently, you know, there's a very common sense level just in here for stop losses, and we're not going to use that one technically, although it would give us a nice narrow entry. We're going to use this level down here. So we can take that intraday volatility into account. So even if it does pull back below the 130.53 level, then you know that's part and parcel of trading. We'd be relatively okay with that, because we're getting into it off the back of the daily time frame and the more recent price action, which is pushing prices to the upside. The downside is we've got to take into account today's volatility, which is really quite poor. But we are now in the trade. We're also in the dollar CAD, which might be close to making a breakout trade to the downside. Crude oil is attempting to push higher. We just want to see probably what the outcome is with regards to OPEC over the course of the trading day. The S&P is threatening to push higher. And we're not really getting that proper corrective move just yet in the New Zealand dollar, which would be a little bit of a bounce to the downside and then looking to get in on that move. Same situation with you want to just perhaps push a little bit lower. You know, you want to just create a clearly defined higher low, and then that's your high probability trade to the upside. So a couple of trades that are really worth keeping an eye out for: the yen. The dollar CAD. You see, the CAD might benefit off the back of the crude oil. So if you double up, if you trade the dollar CAD to the downside and the crude oil to the upside, then they're correlated markets. So again, just be very mindful of that. So we're in the euro yen to the upside. We just got to be quite patient with it. We're already in the dollar CAD to the downside. We're already in profit on that one, and the Aussie dollar and New Zealand, we're just going to sort of bide our time with that one and see if we get that opportunity sooner rather than later. Crude oil threatening to push higher. We would maybe tomorrow we'll get a much better buying opportunity in crude oil, and the S&P 500 looks like we could be making new highs as well very shortly. So what we do need to do, guys, we need to sort of pack it up there. I'm afraid we do have we've got other trading sessions to move across to now in a few minutes. So we'll pack it up there. We'll see these markets perhaps hopefully correct. So we do want these markets to push, to get a little bit of a corrective move before we get that continuation trade to the upside. So this is good news for the Aussie and New Zealand. What you don't want to do is see these markets break these lows. If they break these lows, then that potential buy trade is completely off the table at that point. There's a viable sell trade in the dollar CAD. It would just be below that 23.82 level, so we're only 10 pips away from a potential sell trade in the dollar CAD. It would be supported with crude oil and the euro yen. The yen is broadly weaker over the course of the session, so we'd expect prices eventually to push to the upside, but we just got to be really quite patient with these. Some trades you can get into and you can make profit by the end of the day. Markets like this, that's very unlikely to be the case. So if we do get into trades, we want to be able to give them a bit of time and not be too eager to keep pushing the button, perhaps. So look, this is our trade plan currently up on screen. Let us know if you've got any questions. But on that note, guys, thank you very much for joining us. We do feel free to go to our website, thelivetraderoom.com. For more information. We've got a wealth of products and services available for you. If you are genuinely interested in learning how to trade these markets, I'm sure we can certainly help you with that process. So give us a thumbs up, perhaps subscribe to our channel if you can, click the bell function, and then when we go live, you'll be notified when we are live. And we've got a lot of content coming online as well shortly as well. So there'll be a whole range of different little videos being posted. So hopefully you'll benefit from them as well. So look, from everyone here at the Live Trade Room, thanks very much for joining us. We'll see you again tomorrow at 12 noon. Don't forget. And we'll speak to you then. From everyone here, take care. Bye for now.